Hello and welcome to this episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and back again this week, Luke Lloyd. Cool Hand Luke, how we doing?
Even though we don't have Tony, we have to talk about financial planning, I guess, because Tony loves a planning corner. We all know that.
Absolutely.
So we got to keep that tradition alive. We're talking about taxes. Deciding when to pay taxes. What's kind of a high-level view of that? More a little deeper, dig a little deeper, talk about what the right balance is. If you pay taxes throughout the year, just one lump sum. What should you do? 401ks. We're going to talk all about that fun stuff. So, D, where do you want to start with all of this? Do you, I think estimated taxes, we have some clients that pay quarterly estimated so they don't get hit with anything at the end of the year. Sometimes, if you're an employer, usually it comes out directly from your taxes. If you're self-employed, you have to pay quarterly. So, what's your general thoughts? And how do we apply this to everyone that's listening?
Well, obviously we talk about it quite a bit, and it is called the planning corner, so it is about planning. So that is honestly really the first step, is to come up with a game plan, right? I think people I talk to before they have any type of, advisor or plan or anything like that, it's kind of more of like a reactionary thing. In April, they kind of figure out, oh, well, okay, this is what happened and this is what we're going to have to do, whether it's quarterly payments, whether they get a refund. It's just kind of, it just kind of happens, right? Tony does say it quite a bit. When you have to pay taxes, especially on your investments, that means you're doing something right. So understanding that just delaying taxes forever isn't necessarily a tax strategy. I think that's a real important piece.
I think another important piece is when you have an inflationary period or you have a high interest rate environment to where you're actually earning 5% plus on your cash unearned, there's a thing called time value of money, right? So, sometimes you can pay those quarterly payments. Sometimes you could delay taxes, filing extensions, things like that. So my point with that is if I had the option to not pay taxes throughout the year and just pay one lump sum at the end of the year, that could give me almost a full year of earning interest on taxes that could have been paid, but now I'm delaying it till when I have to absolutely last minute pay them, right? So if you owe $20,000 in taxes and you have a 5%, you can hold that $20,000 in a cash earning bank account earning 5%. Well, you just made $1,000. So you just basically made 5% on your money to pay to the government to, that hedges against your tax revenue. Now that you'll have to pay that $1,000 in tax the next year, the following year, but you can kind of play that game when you're actually earning money risk-free in your bank accounts.
Yep, for sure. So, just understanding that you need a long-term plan versus just reacting to your tax return every year. Just realizing that and then attempting to come up with a plan, you'd be ahead of, what would you say, 90% of the population?
Oh, easily, yeah.
Yeah. So it's also, when it comes to taxes, it's also just not fun to talk about, right?
Yeah.
And especially, these when you're in the political season, taxes is always going to be a topic of conversation. And again, I go back to never really seeing anything like this before. I could be wrong, but I've never seen a political party come out and basically say, hey, you guys need to pay more taxes.
Yeah.
I can't really recall that.
Well, no one will say that to the average person. They'll make a scapegoat of some entity or somebody, a class of people. That's who they'll go after. That doesn't include the majority of people. So it gives, again, them, I said this before, the savior mentality. Oh, not everyone's paying their fair share, when it's just not as simple as that kind of thing. But that being said, there's tax laws and rules that you can utilize to make more money over the long term. So like the biggest hindrance to wealth creation is taxes. There's no other hindrance to any kind of wealth creation.
Yep.
If you didn't have to pay taxes, you could probably speed up the process of retirement by 10 to 15 years. Mm-hmm. And that probably could, even without Social Security contributions. I'm a culprit. I'm a believer that Social Security actually probably shouldn't exist if we actually did things the right way. All we're doing is creating a government Ponzi scheme for Social Security, and everyone's that paid into it should deserve Social Security. But if there was ever a way we could change that whole process of where, the younger generations kind of stop paying into that, and then we're forced to save into another way, a path, like a more 401k opportunity, they have access to that lump sum of money that they have contributed. That's a much better system, in my opinion. So, just understanding how the system works can help you use the system to your advantage.
Yeah, if you ever want to put yourself into a real bad mood, just do the math on how much you contribute to Social Security versus how much you get back out of it.
And then then you have to add up how long you live and things like that. And we don't have a crystal ball. And I know my family kind of history is kind of short. So I'm contributing money in Social Security, and maybe by the stats, age continues to rise because of healthcare and medical advances, whatever you want to call it. But I don't know if I'm going to be around at 75 years old to collect Social Security for 10 years.
Yep.
No one does.
Yep. No one knows. Yeah. So, again, I don't really have, excuse me, I don't really have any great affiliation to either political party. But I don't understand the longer I live, what I don't understand is why people still want to voluntarily give their money to the government. It just never works. And Social Security is a prime example of it. Did it come from a good place? It might have, I don't really know. I wasn't there, but it probably came from a good place. Hey, Social Security, right? It's the purpose of it is right in the name. The execution of it just doesn't work.
Well, you're going to see UBI replace Social Security. That's what you're going to see, in my opinion. So they'll do away with Social Security, but they'll come out with UBI that actually makes people more money over the long term, which is not a good thing, actually, because the UBI is going to raise unemployment. It's going to disincentivize capitalism in a lot of ways. It's going to be more resortful to socialism and communism. But basically, some of the services like Social Security and some of the other government services are already kind of socialistic in a lot of ways. They're much more socialistic now as a country than we were 100 years ago.
Yep.
But that's because of the growth of the economy has allowed us to do that in a lot of ways. But the problem is then you have a two-class system, those receiving UBI and those that basically are creating UBI.
Right.
The question is what's going to be creating that UBI, and the answer to that's probably technology, AI, in a lot of ways. So you have people that have more free time, but what time do they spend on that free time? I know we're going off a tangent here because we're supposed to talk about taxes, but really this applies to the more money that goes to the government, the more they're going to try to do with it, and the more they're going to get involved in our lives.
Yep, absolutely. You hit the nail on the head right there. All right, well, let's wrap up with, I know we kind of got off topic there, but we'll close down with back on topic, because this is probably one of the most common questions I get asked, and it's related to taxes. So when you're saving into your 401k plan, this is fairly new. But a lot of employers now offer you can put it into a Roth 401k or a traditional 401k. So, real quick, traditional, you get the tax break now, but you have to pay taxes when you pull the money out in retirement. Roth, you get no tax break now, but you get tax-free withdrawals in retirement. So I get asked that question all the time, which one should I do? I assume you get that question too. What do you usually tell people in that situation?
It's so customizable. It really depends on someone's situation. I want to hit on, I guess, quickly though, what I was talking about to apply it to this. Mm-hmm. So if we do believe that, and I'm talking more the younger crowd here. I'm not talking like 55, 60-year-olds. I'm talking if you're below 35, 40 years old listening to this right now and you're still contributing to a 401k and Roth and you have the opportunity to choose either. If you do think something more like UBI is kind of around the corner for in the next couple of decades, you're going to see definitely taxes rose on the top upper echelon earners, and you're going to see probably taxes lowered on those that are receiving any kind of UBI, any that's eligible for anything like that. So if you are extremely high income earner, then it's more important than ever probably to contribute to a Roth 401k, because you're going to be taxed like hell if you think your income is going to be much, very, very high when you're 55, 60 years old. If you're on the opposite side of things and you live a modest lifestyle, you are not an extremely high income earner currently, you think your income is going to be a little bit lower, it's more important, I think, than ever to contribute to a traditional 401k to get the tax breaks now, because taxes might not be very high for you down the road. So again, it just depends, but I think that's something you need to think about too.
That's a phenomenal answer. That's very well done. So, and we'll wrap up on this. You know, it's always easier and simpler to get the, more instant gratification when it comes to planning, and especially taxes. And we talk about this forever. Taxes, whatever the scenario may be, we believe taxes are going up in the future. So that may mean, inside of your plan that we need to pay more taxes sooner rather than later to get in a better position down the road. So those are things I think people naturally resist, even though they're going to benefit them down the road. And those are things that I would encourage you to take a look at, in your own personal financial situation. So that was good. The good take there on taxes, a little different than we usually talk about. So that's good. If you guys have any questions, comments, ideas for the show or the Planning Corner, hit us up at info@swpconnect.com, and we'll talk to you next week.